Hello everyone, this is Brandon Garrett of Ben Oak Capital. In this month's video, we'll take a look at where the markets were a year ago and what history might tell us about the upcoming 12 months. The 2020 bear market ended roughly 1 year ago, finishing one of the fastest and most vicious bear markets of all time, one that led to a drawdown of 34%. Things have come full circle now as stocks have staged a strong rally, with new highs happening across the globe as the economy recovers at a record pace. Although we aren't really sure we want to, let's take a look back at the bear market and try to put in perspective just how historic and devastating it was for investors, while also pointing out some incredible positives. Here are a few amazing stats to summarize the bear market and bounce back. Although it was only a 1 month long bear market, the S&P 500 index fell 33.9% from the February 19, 2020 peak until the March 23, 2020 low. Along the way, it set the record for the fastest 20% bear market ever, only 16 days, topping the previous record from Great Depression era 1929. March 2020 was the most volatile month ever. Huge swings, both up and down, were quite common. In fact, looking at the Dow, the average daily move up or down during March 2020 was an astounding 5.3% per day. The previous record was 3.9% during November 1929. Again, showing just how March 2020 was like nothing we've ever seen before. At the lows in 2020, the S&P 500 was down 30.7% for the year, but when all was said and done, it closed up 16.3%. This was the first year in history stocks were down 30% at one point during the year and finished the year in the green. Incredibly, the S&P 500 has increased nearly 75% since the lows a year ago, making it the best start to a new bull market ever. After such a strong first year, where might this bull market go in its second year? This chart shows what happened during the first year and second year of bull markets that followed 30% or larger bear markets going back to World War II. Here are 3 takeaways to remember as the bull turns the calendar to year 2. Since World War II, there have been 6 other bear market declines of at least 30%, and in every single case, the S&P 500 was up firmly the first year of a new bull market, with an average return of more than 40%. The good news is the gains continued in year 2, where we are today, as stocks were also up the second year of a new bull market every single time, up a solid 16.9% on average. The previous best start to a bull market ever was the 2009 bull market, which was up 68.6% after 1 year. Even after those historic 1-year gains, the S&P 500 managed to gain a respectable 15.9% during the second year. Pullbacks tend to happen during the second year of a new bull market, with an average year 2 pullback of 10.2%. This bull market is off to an amazing start, but it is important to remember it is still young. While a pickup in volatility would be normal at this stage of a strong bull market, we think suitable investors may want to consider buying the dip during any pullbacks. Vaccine distribution, fiscal and monetary stimulus, and a robust economic recovery all have our confidence high. COVID-19 still presents lingering near-term risk, with variants of the virus adding to the worry. We continue to expect higher interest rates to fade as a concern for the bull market, but it may take a bit more time to reach that point. That's it for this month's video. If you have any questions or would like to speak to us, please give us a call. We would be happy to talk to you.